The latest inflation data from the United States shows prices surged again in August, but the pace of inflation slowed for the second month in a row, mainly due to falling gas prices. Now, prices were 8.3% higher last month compared to August last year. The figure was down from an annual rate of 9.1% in June and 8.5% in July. Well, Matt Maley is from the investment and trading firm Miller Tabak Co. Thanks ever so much for coming on the programme. Well, this was unexpected.
Yeah, and it was interesting too because the stock market had rallied, almost 6 or 7% from the intraday lows from last week. So people were really kind of hoping that, because the gasoline prices had come down, they assumed that the whole number would come down more than it did. And this is definitely a wake-up call for a lot of investors, I'm afraid.
I mean, look, we're in the grip of tough economic times, heightened geopolitical tensions. What's having the biggest impact on the UK economy more broadly and more particularly to impact on businesses and consumers?
Well, I think, a lot of it has to do with the concerns of what's going to happen this summer. I mean, these numbers have come down in terms of gas prices, natural gas prices, oil prices. A lot of it, though, people are worried that it's been done a lot because the Biden administration is really trying to push down these prices before the election. What's going to happen after the election? Is it going to be harder for prices to stay lower, especially when the strategic oil reserves are pulled away? And so I think that, obviously what happens in the UK and in all of Europe, if, we're staring at a situation where we're worried about stagflation, and that's never good for risk assets and not good for people on a day-to-day basis.
You talk about the UK and the rest of Europe, but the Fed's approach to inflation is bolder, some might say. I mean, is there anything in these numbers that might suggest they should consider maybe a less aggressive approach?
Well, one of the things that I think people are missing a little bit on Wall Street is that the Fed has two goals here. They're not just trying to get rid of inflation. They're also, they've been saying a lot in the last couple of weeks. They want to get things back in balance. And the thing is, we got so much liquidity into the system, after the pandemic for almost 2 full years, through most of 2020 and all of 2021. So removing that liquidity, because we knew the markets were out of balance. They were ahead of the underlying fundamentals. They've got to get them more back in balance. That's going to be a painful process that they keep saying, but it is going to be a healthy one on a longer term basis. So I think that they are going to stick with it for a while, and it's going to be a little bit of painful. It's not a repeat of 2008, but people need to, I think, brace themselves for a little bit more of some rough seas here.
You talk about it being painful. You also say that maybe it's the healthier way of doing things. So what are we looking at here? Soft landing, hard landing? How long are we going to be stuck in this rut?
Yeah, I think it's going to be tough to get the soft landing. It doesn't mean we're going to have like I said, it's not 2008 all over again. We're going to have major financial crisis. But, the run of the mill, I just think it's going to be very, very difficult when you have inflation as high as it is and rates going to move as high as they're going to have to move to tame that inflation and to get them back in balance with what the underlying economy is really doing, because we still have a very big economy. That's going to cause asset prices to come down further. And so I think that we'll have, and of course, asset prices are important for consumers, and they're going to start pulling on their horns a little bit more. That, I think, is going to give us a regular size recession, although not a horrible one. And again, that's going to cause some more pain in the risk markets.
Ouch. Okay, Matt Maley, thank you very much.
Thank you.